What's up, guys? I hope you're all doing well. So, I just wanted to make a little and this time, hopefully, short video about backtesting session on the pair Australian dollar and US dollar, purely because I was really focused today on one pair, which was Euro US dollar. So, I didn't really take any of these trades. So, I thought it would have been beneficial not only for me, but also for you to see what the market presented us today and what could have you have taken and what could have I taken, but I didn't really take it because I didn't look at the pair that much. So I hope this video will be informative, um, helpful for you, and you will get a lot of um, knowledge from this video. So let's get started. So going into today, I had 3 order blocks marked out on 1 hour time frame. This order block that caused the break of structure here, and this order block that caused the break of structure here. And the third order block is actually our supply. And the price has already shown the reaction to that supply. So we can count it as mitigated, but let's jump on 15-minute time frame and let's see whether we can refine our order blocks. So we can refine our 1 hour time frame to this bearish candle, which is the last candle before the impulsive move to the to the upside, sorry. That has broken this point of structure and this point of structure. So we have a lot of liquidity here above our new refined order block. So this order block we can refine to this candle because it's the last candle before the up move. If we drop on 5-minute time frame, we can see that our price is ranging right now, which means that it creates liquidity on both sides of the market. So in this situation right here, we also should mark this order block out because this is the order block that caused the move to the downside and that broke this structure right here. So in this case, I anticipate the price to sweep this buy side liquidity and then to move higher, to move lower, sweeping this sell side liquidity and breaking this structure, mitigating this demand and hopefully creating something not like this but like that from the order block. So let's see what the price does. Let's play the price forward. As you can see, it has already swept the liquidity, and yep. Now let's see what the price does next. So we have great momentum to the downside. We break this point of structure as I wanted it, and now it's going to be just right if I find the origin of the move, and the origin of the move for me is not here or here, because the price broke the structural point, retraced back, formed equal lows, retraced back, swept the liquidity in these lows, and then started ranging. And what we want ideally see is a range initiation out, mitigation of that range of that order block, continuation. Sorry for bad drawings as always, but I usually also use this indicator right here to see whether there is range on lower time frames or not, and in this case our demand, so I mean supply zone or bearish order block is actually an inside bar candle which shows range. So at this point I have put my sell limit order here, the 2.5. I would have put stop loss, and my target, as I said, would have been somewhere at equilibrium. So we have this 9.2 trade ready. So let's jump on 1 minute time frame to see the price action a bit closer. So the price started ranging. Price started ranging, is slowly coming into our zone, and then it finally tags us in, which is great. And in this point, we have a great possible re-entry. So for me, this is a change of character. So this is a sweep of liquidity, and then we have a break of structure to the downside, which indicates the intention of the price to go lower. So I would then set my limit order, or simply doing this by market execution. So on the bottom of this order block, and we can actually this way minimize our stop loss to 1.5 in my case, and to put the same take profit as our initial trade. So now let's see whether this trade is going to play out. So we get tagged in. We're still ranging. Let me take this away so we can see the price action a bit better. So we still range, and then we show a great momentum. So now let's hop on 5 minutes, to see the price better, and to speed up the things. So we now have another break of structure here on 5 minute time frame, and as I said, just to see whether there is a range on lower time frames, I use my indicator, and we can see that there is a inside bar. So what I will do in this situation is that I put my sell limit order on the 50% of that, and 1.5 pips stop loss, and the same take profit. So let's see whether price tags us in. Yes, it takes us in just perfectly and shows a great reaction to the downside, and then it hits our take profit. So this is a cumulative of As you can see, a cumulative of 14, 9.2, 21, 22 somewhere abouts. So it's like a 30 RR in 3 hours. Can I take it away? So now we will take this away just to see a price better, and we will go on 5-minute time frame and look at the price. What does it do? So at this point we have actually wicked the demand zone. Where is that? So we can even take this away just to see the price action better. So we have this lower high, lower low, and what the price does is, it then ranges a bit, mitigates this candles which are not demand because we didn't really break any structure. Nevertheless, we now have broken the structure to the upside. So let's see. We have a gray candle right here, which may be a gray or black. So let's see. We range and then we break the structure once again impulsively. So in this case, I would now be looking at this order block. At the same time, I'm still aware of this liquidity here that can be swept. So let's see what the price does. It once again breaks the structure, mitigates the order block, and then ranges a bit, and then breaks the structure once again to the downside. Let's hop on 5 minutes because it's really slow. So as you can see, we didn't really get an entry on 1 minute time frame, but we did mitigate this bearish order block right here. And as I said, sometimes you miss the trades just being on 1 minute time frame because it's really choppy, and you can over refine your order block. So what I suggest you is that you sometimes go on 3 minutes and 5 minutes to see whether the price did actually break the structure, or is it or has it only wicked it. So in this situation right here, we're still watching what the price does. Now it's ranging a bit. It is still ranging. Can we speed it up a bit? We have this order block right here that has created a break of structure to the upside here, and it gets broken. Let's see, 1 minute time frame, what happens? Yeah, so it breaks, it didn't hold, and now we can see why. So in this situation, we did have this order block, but we had also a ton liquidity built. As you can see, here was the first liquidity pool, and here's the second liquidity pool. So we can say that this liquidity got swept, And now we may look for the order block that caused this reaction, and in this case we can see this little but still an order block from which it has perfectly reacted. So we do this, and now we may as well take this order block, and since we broke this point of structure impulsively, we can set a limit order here, 1.5. And in this case, for the target, I'm going to look to trade into this supply area, just because we mitigated our 1 hour refine to 15 minutes demand zone, and we have definitely changed into momentum. So the momentum has shifted. So now we're not looking only on to target this highs. We can target this highs, so we can partial, but in this case my final target is going to be a supply. So let's see how the price plays out. So we might have a little reaction from this supply, and as you can see, this supply didn't really hold because it had a lot of liquidity resting about, and by that I mean these equal highs, but we still have our order limit set, and as you can see, started ranging, and I think started ranging, and in this case our buy limit didn't really trigger, but we have this supply level, and the origin of the move that has broken this supply is this candle for me right here, that is also an inside bar candle, thanks to this indicator. So we will hide it for a second. So we now can adapt with price and set a limit order here. I will account this wick just to be safe, and the same target, supply zone, equilibrium. This one would have been as well equilibrium. Now let's see what the price actually does. So I look at it as liquidity, so it adds confidence to our trade, but we still may not be tagged in. I hope we do. Just put the things up. Yeah, so we don't really get tagged in here. Oops. So let's see what the price does. So now the price is kind of going away. And a possible scale in may be here, but I'm not sure because, you know, there is a trendline liquidity here. But for learning purposes, let's try this. equilibrium 1.5 and the same target. And as you can see, we get tagged out. So that's a 1% loss, which is fine. Sweep that liquidity, and what we do now is we actually come back to mitigate this order block right here. I'll take it away so you can see the price a bit better. We can refine this order block to this candle right here, because this candle didn't really engulf our order block. So we come back to mitigate this order block to the T that broke the structure here impulsively. So yeah, this one is also a possible trade that you could have taken, and once again you could have as well counted this liquidity to be swept and then to get your trade set up. So the same target, and let's see whether it plays out or not. So yeah, then we can see a great momentum to the upside. As you can see, we did break this point of structure, and the origin of the move was this range. So you may as well scale in here, at least 1.5, and the same target here. But to be honest, I would have counted this week too, just to be safe. So let's get in. As you can see, we get tagged in, and then price goes away. And then I think, since we break, so how would I have managed it is that since we didn't really break this point of structure, I wouldn't have moved my stop loss. So yeah, we didn't really get out of the trade yet. The price didn't take us out. Let's make it 5 minutes, and then we hit our take profit. Not yet. But up to this point, as I said, since we broke this structural point here, and then we even broke this point here, I would have trailed my stop loss to here. So that's where we get taken out. So let's make it a bit bigger and rad. So cumulatively, we would have been 2.5, let's say, and how many is that? 2.5 and 8, which is 10 RR. So everything together, it is 40 RR on Australian dollar USD. If I'm not wrong, it actually started ranging. Let's see. It actually started ranging, and so where the price now? So since it's 9 p.m. I don't really look at the opportunities because it's spread hours and I don't really trade this late. But yeah, let's see what the trades were. So we took this 3 trades here, which cumulatively were for 30 RR. We took one loss somewhere here, if I'm not wrong. So we took 8 trades. One didn't play out, 2 were not triggered, and the rest 5 were successful. So yeah, I hope you liked this video. This video was full of information for you, and yeah, thanks for watching and have a great day.